Hello and welcome back to the channel. Today we're going to be talking about all of the different types of actuaries and the unique areas in which they specialize. Now, what is an actuary, you may ask? Well, an actuary is a business professional who deals with risk assessment and management and financial reporting and forecasting. They work with businesses and clients to develop policies that minimize the costs associated with the risks of potential events that may occur, such as death, sickness, an accident, or a natural disaster. Most actuaries work for insurance companies, and most work solely in an office setting, while some who are consultants travel to meet with clients. Actuaries use mathematics, statistics, and financial theory to analyze the economic costs of risk and uncertainty, and they produce reports with charts and tables to explain and visualize their calculations. The best actuaries typically have strong analytical, statistical, and computational skills, as well as some business knowledge. However, despite having very similar strengths, actuaries in each specialty area focus on completely different types of risk and uncertainty. We're going to be talking about actuaries in the insurance industry, so health, life, and property and casualty insurance, as well as actuaries who work outside of the insurance industry, so enterprise risk management, public sector, and pension and retirement benefits actuaries. I work in the pension and retirement sector, so I have a little bit of extra insight into that specialization. So first off, we're going to be looking at life insurance actuaries. These actuaries help develop annuity and life insurance policies for both individuals and groups by coming up with estimates of how long someone will live based on risk factors such as age and tobacco use, for example. So essentially, they assess the risks associated with life insurance policies, such as mortality rates and longevity. They crunch numbers, analyze data, and develop pricing models to ensure that the insurance company remains financially stable while still providing fair premiums to policyholders. And this is a commonality amongst insurance companies where they need to ensure that the premiums that they determine are profitable yet also competitive with other insurance companies. Next up, we have health insurance actuaries. These actuaries specialize in the healthcare sector, focusing on managing risks related to health insurance and healthcare costs. They evaluate factors like medical trends, treatment costs, and healthcare utilization rates to help insurance companies and healthcare providers make informed decisions. Additionally, they help develop long-term care and health insurance policies by predicting expected costs of providing care under the terms of an insurance contract. These predictions are based on several factors such as family history, geographic location, and occupation. Health actuaries play a crucial role in ensuring the financial sustainability of health insurance plans and optimizing healthcare services. Moving on, let's talk about property and casualty, or P&C actuaries. P&C actuaries work with insurance companies that provide coverage for property damage, liability, and other risks. They assess potential risks associated with natural disasters, accidents, fires, and other events that could result in claims. These actuaries analyze data to determine appropriate premiums, estimate claim reserves, and develop strategies to manage risks effectively. They help develop policies that ensure policyholders against property loss and liability resulting from the things we just talked about: accidents, natural disasters, fires, and other events. As an example, they might calculate the expected number of claims resulting from automobile accidents, which can vary with an insured person's age, driving history, the type of car, and more. Now, let's take a look at pension and retirement benefits actuaries. And like I said before, this is the sector that I'm in. These actuaries specialize in retirement plans and pension funds. They work closely with companies and organizations to ensure the long-term financial stability of their pension programs. Pension actuaries analyze factors such as employee demographics, investment returns, and government regulations to provide advice on funding levels, contributions, and pension plan design. They design, test, and evaluate company and municipal pension plans to determine if enough funds will be available in the future to ensure payment of benefits. They need to report the results of their pension plan evaluations to the federal government, specifically the IRS. Pension actuaries might also assist businesses to develop other types of retirement benefits, such as 401ks and healthcare plans for retirees, and they might provide retirement planning advice to individuals. Next, let's talk about enterprise risk actuaries. These actuaries have a broad scope and work across different industries. They focus on identifying, assessing, and managing different types of risks, including economic, financial, and geopolitical, that can impact an organization's overall short-term or long-term objectives and performance. Enterprise risk actuaries analyze data from various sources, such as financial markets, operational processes, and external factors to develop risk mitigation strategies and provide valuable insights to senior management. They help top executives determine how much risk the business is willing to take, and they develop strategies to mitigate the financial impact of those risks. Finally, we have public sector actuaries. Public sector actuaries have differing duties depending on the level of government in which they work. In the federal government, for example, these actuaries may evaluate proposed changes to Social Security or Medicare, or conduct economic and demographic studies to project benefit obligations. At the state level, these actuaries might examine and regulate the rates charged by insurance companies. And there you have it, the different types of actuaries, each playing a crucial role in their respective fields. Whether it's life insurance, health, property and casualty, pensions, enterprise risk management, or public sector, actuaries are essential in protecting individuals, companies, and society from financial uncertainties. Thank you for joining me today as we explored the diverse world of actuaries. If you found this video informative, don't forget to give it a thumbs up and subscribe to the channel for more like this. And as always, if you have any questions or suggestions for future videos, please leave them in the comments below, and I will see you next time.